Hey, Press.
Hey, how you doing, Miss Lisa?
Oh gosh, we're having one of those weeks. What on Miss Lisa? Oh boy.
Mhm.
All right. Thank you. Hey, everybody who's tuning in. Press, can you give us our topic of the day?
Basically, the topic today is the weekend review, state of the market, how the market performed this week, and what to expect this upcoming week.
Okay. And let's get started with something that came out recently in the news that was on our agenda for today, the T+1 settlement. Can you tell us
Yeah.
exactly what that is and give us the breakdown of this?
So basically, the T+1 settlement is basically pertains to people that are actually trading stocks versus investing long term in the stocks. So basically, what happens is, say for example, you buy a share of Apple today and it increases in value, and you want to sell it today, you're able to do so.
Prez, your audio is breaking up a whole lot. Guys watching, how is are you able to hear?
Is it
Are you
better
able to
now?
hear what Prez is saying?
I hear you now.
Okay.
So I'll start
All right.
over.
All right.
So basically, the T+1 settlement, for example, you purchase a stock today and you sell it today. If you have a what is called a cash account, then you're able to use those funds again tomorrow. It only takes one day for those funds to settle versus how it used to be. It used to be 2 days. So if you buy stock and sell it today, you'll have to wait 2 full business days for that money to be settled in your account where you can use it again. So it's basically been a game changer for traders who trade in and out of actual shares versus options, to where as though they can buy a share today, a few shares today, and sell them today, and tomorrow those funds will be clear in their account.
All right. All right. So, I think back in 2017 was the last time that they changed it from 3 days down to two. And so now it's shifted down to 1 day. So it's a new
Correct.
rule. It just took effect on May 28th. I'm not sure if you said that. So any thoughts? Is anyone any thoughts on that? Do you think that this is a good thing? Anybody have anything to share on that in the chat? So yeah, it's something that I think the SEC saw that there is technology, there is digital trading, um, and things should be able to settle more quickly. So why isn't that being translated to people that are doing trades? So
Me
a good
personally, I
thing.
think it was a game changer because I day trade as well as long term invest. And sometimes I would rather just buy the shares, but I'd be reluctant to do so because I don't want my money unsettled in my account for over a period of 2 days. So whereas though if I trade option contracts, I can use the money today and then use them same funds tomorrow as long as I close my position on the previous day. So it definitely was a game changer for someone who doesn't have a $25,000 trading account. You can have a small trading account and you can potentially grow it in less time, and you don't have to worry about missing out on certain opportunities because your funds are settled that following day. So
Okay.
I
Okay.
always recommend to someone with a trading account to make sure that it's a cash account versus a margin account, because you can get around the 3 day trade pattern rule, throughout the 5 day period. You don't have to worry about that as much. As long as you have enough settled funds in your account, you're able to trade the following day.
Mhm. And having an account on a different, brokerage also gives
Exactly.
you that flexibility. All right, so that's the T1 settlement. And just overall, let's talk a little bit about, inflation, and I left my paperwork downstairs, the PCE, and, just how it's impacted the market as we finish out was we came to the end and have now closed out the month of May. So, what updates you have on the inflation? Slower than
Okay, so
expected?
As far as the inflation is concerned, what I noticed that it came in just as it just met expectations, meaning it didn't
Mhm.
lower any compared to what they were expecting it to do so. And the market basically reacted to it. The market pulled back slightly. It was a healthy pullback, a much needed pullback, in my opinion, anyway, because everything don't go up forever. What goes up must come back down. And if you're the type that dollar cost average, and you could have possibly taken advantage of the pullback in some of these good companies, in my opinion. Um, as far as what it does for the Fed rate hike decision, we just don't know. It's a lot of uncertainty going on in the market still. We have the elections coming up, and we have geopolitical events that can cause the fluctuations in the market. But this is normal because we're thinking 5, 10, 15 years down the road when we're dollar cost averaging and investing into ETFs like BTI and VOO, and then start looking at individual companies. So it's just been a buying opportunity for me. Is a new bear market starting? No, I doubt it, because we still have this is still an election year, and the market is resilient at the end of the day. We have a very resilient economy. So my thing is, if you haven't started already, this is a good opportunity to get started because the market has cooled off just a little bit. In my opinion, I'm thinking that the bull market still has run yet left to run. In my opinion, that's
Okay.
where I'm at as far as inflation is concerned.
Yeah, I think that I was mentioning in last week's when we were on last week how these stores, Target, Walmart, Amazon, Walgreens, so many of these stores are trying to lower prices on as many goods as they possibly can. So they see that consumer spending is down and showing signs of weakness. People, I would say, many people were already or are already kind of living beyond their means, and now that the necessities are taking away any money that they had left. They're left to have to focus on the rent, utilities, medical costs, gas, insurance. Those things are taking so much of our income that travel and, recreation, discretionary type of things are very hard for a lot of people to fit into the budget. So inflation, um,
My advice as far as trying to how do we combat that? How do we navigate through it? Try to create another stream of incomes. Try to start a side hustle. Try to possibly make a career change to where as though you're bringing in a little more income. I know it may seem hard, but I'm sure it's something, some type of hobby that you're into, whether it be arts and crafts or something like that. Lemonade stand, sell waters on the corner. Like, there's nothing wrong with it because I actually did it, and it was my main source of income for 3 summers in a row back before I even moved from out of Maryland to Pennsylvania.
mhm, mhm. It's funny
I
whenever I
was
see
like just coming home from being incarcerated, and because of my record, nobody wanted to give me an opportunity as far as a job is concerned. So I basically made one. I went out and got
mhm,
me a few cases of water and a few coolers, and I went through downtown Baltimore and I was selling ice cold waters for $1. You understand what I'm saying? That was a side hustle, but it was my main hustle at that point in time because nobody was simply trying to give me a job at the time. That was the cause of me moving to Pennsylvania, because the job market in the warehouse field was very plentiful, whereas though I can make 20, 25 bucks an hour easy. All I had to do was make sure I had transportation to get there. And then on top of that, I started, creating little side hustles. I learned how to trade in the market. So that was a side hustle for me. I learned how to trade.
mhm. Maybe you and I should sit down and do all of our streams of income at some point. Um, But, when you said about a lemonade stand in the summertime, whenever I'm out and I see a child that has a lemonade stand out in their yard, I always stop. I never want the lemonade, but I'm like, "Do I have some dollars or some money so I can go and give them something?" Because 'Cause they're always so happy and so cute. So, we will see if I
Yeah.
run into any little kids doing that anytime soon now that summer is here. Alright, so, yes, multiple streams of income, something that we definitely need. And, it's funny growing up, I was just talking to my mom about one of my uncles because we weren't using these terms when I was young, multiple streams of income and generational wealth and all these things that I feel like I hear every day now. I was seeing it, but it wasn't a discussion. So I had this one uncle, and regular person, no higher education or anything. He drove the city bus during the day, and then he created a business where he was doing cleaning of not apartments, uh businesses at night. So he would do that. And then he was able to buy a second property. And so he had rental income there. And his house, he had a pretty good sized house. So he would even rent out rooms in his house. And on top of that, he had a car, and he would take people to the airport. Um, and it's just now, as an adult, thinking back, he was just always going and doing all these things. And as a little child, it didn't impact me the way it is now when I see him. When I think back to what he was doing so much. And I wish, as younger in life, for myself, that I took inspiration from what he was doing, because he was a great example for me to say, hey, you just don't work the day job and that's it. And the story, just lay around for the rest of the evening. Use that, and then, generate more for yourself. All right. So on to what's next, the state of the market. What companies, or what things did you see going on in the news since we last met that you wanted to talk about?
I basically saw, I didn't even write them down. I apologize for that. But I did see a few earnings reports that had weaker than expected forward guidance, which also added to the market pullback that we experienced the middle part of the week. Um, I believe that the tech sector as a whole is slightly overvalued. If you take a look at Nvidia, let me see if I have it pulled up. Nvidia has a PE ratio. That PE ratio means price to earnings ratio. They
Mhm.
have a PE ratio of, I just had it right here. Oh, Nvidia has a PE ratio of 64.15 compared to the industry, which is currently at 45.82. So, to the people that were wondering whether to dollar cost average into Nvidia before or after the stock split, if you haven't done so already, I personally would wait until you get a nice healthy pullback on Nvidia, simply because it's slightly overvalued right now. Well, it's a lot overvalued right now, in my opinion. And the last thing I want is for you to start buying into Nvidia, and you won't be able to handle the pullback, and then you end up selling it for lower than you bought it, and then it starts running away on you again, and then you want to buy back in once it runs back up. That's like counterproductive, is hustling backwards, or whatever term you want to use for it. That's why I started dollar cost averaging into it around the $500 mark, and I expected it to pull back to around $300. It has yet since to do so. So I just continue to dollar cost average into it on a regular basis when it's time to, long as I'm backed up by my ETF, my main ETF, which is VTI, and I have that at least 60% or better, then I know it's time for me to start dollar cost averaging into Nvidia again. But I'm basically waiting for the stock split if possible.
Yeah. So when did you first invest into Nvidia? Because I only started at the very beginning of this year. I would say January 3rd. When did you first invest?
Um, I want to say back when it was around 200 and something dollars in my main portfolio, because I have a
Okay.
cost average of around like $400 and some change in my main portfolio. So I've been dollar cost averaging into Nvidia back when it was really beat down, because you already know, who with the crystal ball was
Mm.
purchasing call options on Nvidia. So I'm like, well, let me really look into it. So artificial intelligence, that's like the next revolution as far as technology is concerned. So I want to get in kind of early. During the previous bear market, I was looking for companies that were really beat down, that had potential to run in the future. So I kind of sort of was smart enough to start getting into Nvidia when nobody else was really talking about it. They were really talking about is Nvidia going to zero. So you want to be greedy when others are fearful. And while everyone was fearful, I was starting to look at Nvidia as a potential longer term hold versus just trading in and out of it.
Okay. Yeah, I recently did a video. I was talking about Nvidia, and yeah, I would say like I said, I started at the beginning of January. About by the third week of January, it had moved up $100 from when I had started from the beginning of the year, and then yeah, it just took off. It was hard. I wasn't doing it on a daily basis, but I was doing it regularly, and I can see from my the way my dollar costs purchases. I was um I was searching for the days when it was below $800 and it just took off. But yeah.
Yeah, yeah.
D and so
Michael the
by the
Knight
end of the
said, "Is it
week.
overvalued though?" In my opinion, yes, Nvidia is overvalued. I'm gonna read it again. The PE ratio for Nvidia is 64.15. The industry rate PE ratio was 45.82. So
Mhm.
it is overvalued, but their earnings has been blowing it out the water. So when the pullback is gonna come, we just don't know. That's why, as an investor, I like to dollar cost average. I have a set amount, a regular set amount. When it's time for me to dollar cost average into
Yeah,
Nvidia, I don't care what because I'm already expecting a pullback. You understand what I'm saying? So when the pullback
yeah.
happens, hopefully I have just a little bit more so I can add a little extra to my position. If not, then it'll be the regular amount.
Okay. Your audio is cutting out a little bit still. So Nvidia, just a few months ago in March, they announced they had done an update to their AI chips. And just recently, I guess maybe at the end of this last week, they announced a new generation of AI chips already. So they are definitely just just making sure that they are staying ahead of the game, and just AMD, Intel, everyone is trying to keep up with them, but for them to be putting out an update already so soon is really like sparking some headlines of, so many different companies. They are definitely the leader of the pack when it comes to AI chips. So we have to see whether we want to stick with investing into Nvidia. But I know you definitely do a mix because you have AMD, Amazon, and these other companies in your portfolio. Also, I have Microsoft, Google, Amazon. So, but not nearly. Those positions are much larger than I have with Nvidia because I got started when when it was taken off. But um, it is what it is. I definitely am not someone who gets off track with their investing. So in time, I will have everything built up to the positions where I want them to be.
Someone said Nvidia
Oh,
is not a
people are saying
long-term
they.
hold play. Its valuation ignores growing competitive threats. I don't see any many competitive threats when it comes to Nvidia. Um,
Mhm,
at the end of the day, this is not a one size fit all shoe as far as investing is concerned. So your opinion on Nvidia may not be my opinion on Nvidia. I personally see it as a long term hold because artificial intelligence is the next wave of this, the next technology revolution that's going on right now, and they deal with a lot of artificial intelligence hardware. Whereas though and yeah, Microsoft deals with the software aspects of it, and then a lot of these tech companies, as far as artificial intelligence is concerned, now working together. Like you have Microsoft working with, I believe, AMD now, as far as they want their computer chips, and you have Tesla that's currently working with Nvidia as far as their hardware is concerned. So I don't want to be the one to miss out on any potential gains from any of these companies. Now, if the business model changes and I see the way as though it's no longer a long-term hold, then I will simply just take profit. But majority of my money at the end of the day is into VTI. So either way, I have Nvidia. I'm exposed to Nvidia either way, whether I hold it individually or if I hold it in this ETF. Either way, I'm exposed to Nvidia. So
mhm,
if the
mhm,
ETF has it, then it's obviously a good enough investment for me to have individual exposure. They're constantly blowing earnings out of the water. They have a stock split coming up, which is good for investors, for smaller investors to have direct exposure. They're able to potentially buy whole shares versus fractional shares now because the share price will be around $100. So
mhm.
that's just my opinion on Nvidia.
Yeah. And as far as like, especially if it's a company in the top, let's say 10, 15, yeah, that's uh, a company with a large market cap. And, I don't know if I would say everything is in there, in VCI, but yes, there are the top companies that I definitely have no problem. Um, I have confidence in them for the long term, especially those ones that are at the top of the list. So, any other tech stocks that that you wanted to talk about that you feel are like currently overvalued? Any thoughts on Tesla or Coinbase, or did you have any other ones in mind?
I do believe that Tesla is overvalued. Now,
Mhm,
yeah, as far as Tesla, I do believe it's overvalued. At the end of the day, it's basically a car company. Yeah, they have other business ventures that they're into, but at the end of the day, they're basically a automotive company that is overvalued. Um, they haven't been doing well over as far as auto sales. So if they don't sell any cars, they're not bringing in any revenue to the point where they recently lowered some of their prices on some of their vehicles to try to sell more. And yeah, I believe Tesla is extremely overvalued. But I
mhm,
believe in the company. I cannot go outside and not see a Tesla. I will continue to dollar cost average in a Tesla. Now I have been thinking about moving it further up on my pyramid. I'm thinking about moving it from level 2 to level 3 to where as though it's only 2% of my portfolio because I'm expecting a nice pullback. And the last thing I want is for one particular company to be dragging my portfolio down. So I have been thinking about changing the allocation on it as far as how much I'm investing into it. I may hold off on buying any more for now and replace it with another company. I'm not going to sell it, but I'm thinking about replacing it with another company on level 2. And level 2 of my pyramid is basically 5 companies, and it's 4 companies, and they're allocated at 5% apiece. So the entire level 2 of my pyramid is only 20% of my portfolio, whereas VTI is at least 60% or better.
mhm. So guys, my structure of my portfolio is not as structured as Prez because well, this is your YouTube portfolio. I don't know how your allocation is in your, your other portfolios, but
They're all the same, just different
all
companies.
okay.
They're
I
basically
I
all the same, but I have different companies on different levels. Like one particular portfolio, I have 2 healthcare sectors on level 2 next to Apple and Microsoft, where Nvidia and Tesla, they're sitting on level 3, along with Alphabet and companies like that.
okay. So I um a few years back was investing more into individual stocks than my ETFs. So some of my individual stocks are still outweighing my VTI or VOO, especially Apple. I had got my when I was starting to evaluate that situation and wanting to add more ETFs into my portfolio, my Apple position was over 50% of what I was holding in my portfolio over on Webull. So yes, I've gotten it down. I've gotten it. It's below 50%, but it's still significant. Uh, so all right. So on to
Wow,
market.
50%? You was going hard. I said
You
50%,
never
you was going hard.
you must have forgot because I've said this so many times.
I didn't know it was that
But
much. I knew you had a lot of it, but I didn't know it
yeah,
was that much.
no, but yeah, and you know something? And I had actually taken a break. I shouldn't have because my I also fell into a different something else that we talk about sometimes where you don't want to mess up your average. My average was $120, I remember, and I took a long break from investing into Apple because I didn't want to mess up my average, but I should have continued investing. But at the same time, I'm not going to beat myself up about it because it gave me a time to focus on my Amazon and Google and other things that are also doing well, doing better than my Apple in my portfolio. So maybe I needed that break, but I should have at least kept a small amount going into Apple because that that keeping your average, you can't be holding on to that when you could have, when your say Nvidia average is $400 and you're like, oh yeah, I'm not going to mess this up. Mess it up. If that's what you're thinking, it's not messing anything up. We just have to keep going forward, whether it's an individual stock or ETFs, because what's going to, on certain things, we can't just be blindly, or certain things that and you believe in for the long term. Yes, don't be holding on to, I have a good average.
Yeah,
Just
the
know.
average will hold you back. Trying to save your low cost average will
Yes,
hold you back. You could
make your
potentially miss out on an accumulation period in the market, to where as though it then fell a little bit and now it's trading sideways. That's the time for you to start accumulating. It's found support. It's found a nice support level, and it pretty much doesn't have any room to go any lower. And you're so worried about your average, and then you get some good economic data. Jerome Powell decides he wants to cut interest rates, and you see the market go to the moon, and you're like, wow, I wish I would have bought more. So yeah, to the viewers out there in the chat, don't worry about that cost average. Just simply, if you're dollar cost average, and just simply continue to stay the course, dollar cost average, to whether the price is up or down, and you'll be all right. Think 10, 15, 20 years down the road, if you look at an actual chart of any of these individual companies or the S&P index as a whole, it has done nothing but gone up throughout time. So ain't no way, and you know what, you're going to be able to keep that average the same unless you want to keep that same small position or keep that same position size.
Yeah. And I mean, yeah, it is the market. You will have some downtimes, but when it comes to it's going to recover. The total US market is going to recover. So yeah, about this average. Yeah. Just
Yeah,
focus
I've been
on
bitten by
how.
saving the price average too. I'm
Yeah.
guilty too.
So yeah, I know sometimes I stop and share at a certain point. Like when I got to recently, I shared I had gotten to 20 shares of VTI in one portfolio. So I don't have a set goal on how many shares of something that I want to have. I'll just stop and I might say, this is a good point to share. I'm at 500 days or I'm at this many shares, but I think you should set goals like that for yourself, whether it's a dollar amount or a share size goal. Just create goals like that on those long-term holds and just keep plugging away at it and just stay focused and consistent with your investing. So what else do we have to talk about? Did we cover enough on like how we ended May and the market pullback, uncertainty? Anything else you wanted to share along on that topic, Prez?
I see a comment, markets will go to the moon when Powell hits at a rate cut. When the cut actually happens, the market will start crashing. I mean, we can only base that off of previous history, but that previous history does not guarantee the future performance of the market. At the end of the day, I'm a dollar cost average type of investor. Like, let it crash. Come on down. Like, I wanted to actually, because I would like to accumulate more of my VTI at a lower price. I would like to accumulate more of my Apple and my Microsoft at a lower price. So a market crash really doesn't bother me at all. On top of that, I've acquired the skill to know how to play the market when it's crashing. So I make more money when the market is crashing than when it's actually going to the moon, as far as in the short term is concerned. And I just simply take some of my profit and add it to my long term while the market is crashing. So I get pumped when the market start crashing. Yeah, it doesn't look good looking at your portfolio and it's red, but if you allocated it properly, you really don't have much to worry about. You look at it like the market on sale. You get pumped. You start looking for those extra streams of income so that you can invest more, so that you can double down on the red days and things of that nature. So let them crash it. I wish they would. I wish they would. Let them crash it.
Yeah, but
Because I'm
when it
not
comes
looking at
to
the short term here. I'm looking 10, 15, 20 years down the road at the end of the day.
the stock market, that's the one thing that people don't seem to want when it's on sale. They want to buy in when they're hearing about it. When you're going to the supermarket, when you're going to buy a car, when you're going to do all the other type of spending, you're looking for the low price. But they're afraid and looking the other direction and saying, shaking their head when certain stocks are down. But we have to realize that it could be just something that came out in the market, the economy, but in time, they're going to pick back up and thrive again. So yes, I buy the dip. And so Prez, how you're saying about the volatility and taking advantage, because are you more flexible in some of your other portfolios with, say, for example, investing when do you stick to your schedule? Because I know, like, you'll say, this week I'm working on level 1. And so when it's level 1 week, do you never buy something from from level 3? Oh shoot, I just got my first ever super chat.
Congratulations. Shout out to a brother of a certain age. Thank you for the super chat for Miss Lisa J.
Thank you.
That's awesome.
Well, guys, yeah, just a few days ago, I did get monetized. I did put in the application and I was approved. And I guess now I actually know it's working. So I done forgot my question. Do you have an answer?
To answer your question, I run a tight ship as far as how I manage my portfolios. If it's time to buy, then it's time to buy. If it's not time for me to buy it and the opportunity presents itself, sometimes I will bend my own rules just a little bit, but then it takes me so long to get things back on track that I really try not to. I may look at it as a potential trade and add it to my trading portfolio. Like, say, for example, when that time when Meta pulled back like it did, that was a good opportunity. I'm using that as an example. That was a good opportunity to maybe buy a few shares, and once it came back to normal, you could have potentially took profit on those shares, or just simply raised your stop loss up and still been in the play. That's what I do when I get pullbacks like that. I look for good swing trading opportunities. Okay, well, let me buy a few shares of this and ride it up a little bit. And once it gets back to where it normally was as far as the chart is concerned, then I'll potentially get out of this position and add that profit to my VTI position or something like that. I try to stick to the script as far as how I dollar cost average and when I buy the dip and things of that nature. Now I do have a portfolio where I do double down on the red days. If it's my day for me to buy that particular asset and it's nice and red and I seen it as found support, then I'll do my purchase in the morning, then I'll come back later in the afternoon. Okay, the market is down like 0.5%, almost 0.5% as far as the S&P is concerned. Let me go ahead and double down. Let me buy a little bit more, take advantage of this nice dip. But my YouTube portfolio, that's strictly $5 a day, 5 days a week. On the days that the market is closed on a weekday, I do a makeup day, like we just had Memorial Day. So on Tuesday, I was buying, $10 of VTI instead of 5 because it was my week to buy VTI. But I have a very strict strategy as far as trading and investing, and I like to stick to it because the minute you come up with a strategy and you back test it and you find out that it works and you start deviating away from it, well, let me go ahead and nibble on this high risk trade real quick, and then you end up losing more than you set out to lose, and that's not the way to go.
Yeah, so I don't necessarily have a weekly structure with my investing. I have some things when I commit to them daily, it's daily, some things weekly, but then there's other things that I just kind of bi-weekly, I kind of mix in as I see a price that I like. But my right now, my daily commitments that I am working on is VCI. VCI has been a long time one for me. I still have on my set it and forget it, $5 on Apple. And I have been doing for the next few weeks, I'm going to get $500 invested into Microsoft. So I'm doing $10 daily into Microsoft. And then after that, I will reevaluate what I'm going to do to continue to build up that position. But this first few weeks of doing the $10 daily is going to get me over my first share into Microsoft. So then I can really feel like it's officially, a little start to it being in my portfolio. So anything else that you want to cover today, Press?
I just wanted to add that the largest pullback year to date so far was 5.5%. And normally when we have a market correction, it's at least 6 to 10%. So I don't see any bear market coming anytime soon. Like I said, we have elections coming up. This is an election year. So I'm expecting the market to pull back after the election is over, possibly the end of this year. What I'm doing in the meantime, I'm trying to come up with as many streams of income as humanly possible to prepare for the next bear market, because this previous bear market, I wasn't as prepared as I should have been, primarily because it was my first real bear market that I've experienced. And that was a nice, long, slow bleed out. And I wish I would have been able to have the knowledge that I do now to navigate it properly, as far as coming up with boatloads of cash to dump into the market. I would be up way more significantly than I am now this year. So bear markets make millionaires at the end of the day. I'm learning that as I go along.
Okay. All right. So anything else that you wanted to chat about or cover in today's episode?
I see a comment. Please cover ASRT, the next major short squeeze. I don't do short squeezes. I don't. Why? Because someone will be new to the market and they will have that get rich quick mindset, and they'll try to follow or try to match the trade, and then they don't know how to use a stop loss. They're going out taking out loans and using their bill money into these short squeeze trades, and they're losing their money. And then the first one they run into is the content creator that was pumping this stock up in the first place. So I say that a lot of times. I say that almost every day on my live streams when I go live during the week. I don't do short squeeze plays. If I do, I won't even tell anybody about it, because I don't want anybody. I have a lot of beginner investors and traders alike that watches my content. So I want them to learn the correct way to get into the market and how to invest and potentially learn how to trade. These short squeeze trades, the same way they run up, is the same way they come crashing down. And if you don't know how to navigate through these particular individual stock trades, you're gonna get smoked. You're gonna get smoked. Take it from me. I know. I've been there. You're gonna get smoked, and you're not gonna like the outcome. You're gonna be mad. You're gonna be bitter. You done used some money you shouldn't have been using into this trade because you wanted to turn $1,000 today into 50,000 tomorrow, and that's not the way to think when you're navigating through this market. Yeah, it's possible, but you really, really got to take the time to learn how to use a stop loss, to learn how to properly allocate into an actual trade. You don't want to use too much in a trade. Know how much you're willing to lose before you even click that buy button. You understand what I'm saying? And you'll be okay. But you're much better off having the mindset, I'm thinking 5, 10, 15 years down the road, and invest into an ETF first. ETF first. Build your pyramid up first. Then you'll know how much you have to allocate to a trade.
Yeah, I don't want to discourage anyone, because investing is not hard. Trading takes more skill and responsibility. And if you don't even know how to put on your stop loss, how to figure out what percentage or what dollar amount, then that should be a sign to you that you need to take it easy, get a full understanding, have a plan. I think both Prez and I have been through some different stages when we got into things when we did not have a full, complete plan. And now when we do get into trades, well, let me speak for myself. When I get into a trade, I have a plan and I'm able to execute it immediately, because I'm not in this to lose money. If potentially there is any risk that I need to take, it's going to be a small amount. It's going to be what I am willing to lose. It's not a gamble to me. It's not a gamble. I don't, if I'm not in a place where I'm going to, for example, hold a option overnight where my stop loss might kick, is not going to work over that time period overnight. So I have to have a full plan and realize, okay, I'm willing to take whatever profit I have today. I'm not risking this. Potentially, I could make more money, but I have to know what my limitations are and what my comfort level is and make my choice from there. I might have to see if I could get back in the next day if I'm not willing to hold overnight. But I have to take things slow. And with other things in life, we probably say, I can't manage that. I can't I'm not trying to make the birthday cake from scratch. I'm just going to go to the bakery and go let them, the experts, do it. So you have to know what you can handle. And we can all handle investing, but it takes some time and skill and knowledge in order to become a trader, especially options trading, which is, to me, definitely takes a little bit more understanding and planning. Are there any other comments that
How
how do
about
I
how do you do dollar cost? Whatever you want to buy at the time, or is there another method to determine what and how much?
So yeah, Shannon, I was saying that there are certain things, certain time frames where I will like VTI. I've been doing that for over a year now. So I do VTI $10 daily at a minimum in my account on public, but I also have VTI in my public in my account at Webull. So if I want to, if my budget allows for it, I usually do my additional investing in my other portfolio because I started this challenge and I've been sharing here and on YouTube. I never really my investing is just truly what I've been sharing is my investing. And nothing was related to I'm doing this to share it on YouTube. Some of these portfolios, they date back to 2021, 2020. And I've only been on YouTube a little over a year. But what I do is I decide what I'm going to invest into. And then from there, I figure out my budget and I plug away at those positions to build them up. So, for example, my daughter's portfolio, I usually, when I get to $50 or $100, then I do my investing. So it's really based on my budget and what I want to invest into. I do invest heavily into ETFs. And then I have my select blue chip stocks that I also dabble in, invest into, and I hold them for the long term. And then I do a little bit of trading, but I've always been describing myself as primarily 95% investor, maybe 5% trader. I don't necessarily, some months pass by when I don't do any trading, whether it's just trading a stock or options trading. But I am open to it, and I wanted to be even more open to it in 2024 in order to generate more income that I will then be able to put into my long-term holds. So I guess my plan is it's different. Like I don't know if you were on when I shared that right now I have 3 daily commitments, and they are Apple, VTI, and Microsoft. But I'm also still working on my positions on Amazon, Nvidia. I think I've only invested maybe twice since they announced the stock split. And the split is coming at the end of the week, so we will see if I just may wait at this point now and not even another $5 or $10 there until the split occurs. But I just have my positions that I want to focus on, and I make a plan based on my budget and stay consistent with it. But everything cannot be daily for me, but I figure out whether it's going to be daily, weekly, and just make sure to keep up with it. I still have been building up my dividend portfolio, so I try to do at least 1 share weekly on that. So I have different plans for different portfolios, and there's never a day that the market is open that I don't make some type of investment. I just look at it like that. But
That's what's been hard, training myself to buy when something is going down. Whew, it's like before you swallow that nasty cough syrup. Like, hold your nose, cover your eyes, and if you believe in the company at the end of the day, and you're properly allocated into an ETF, whether it be VTI or VOO, like I say, I do 60%, at least 60% before I even start looking at individual companies. You have your ETF to fall back on. You won't have to worry about it dragging your portfolio down 10, 20, 30% during the bear market, when it should never be down that far ever if you have it allocated properly. You may have one knucklehead company in your portfolio, like, should I cut this or should I buy more? You may have one or two that's like that, because at the end of the day, we're not perfect as far as picking stocks and things of that nature. Where a lot of us are still learning. And even if you have the experience, you're still learning. At the end of the day, you don't know what's going to happen in the future with these individual companies. That's why I preach time and time again, be properly allocated into an ETF first before you start looking at individual companies. And don't over allocate yourself, meaning don't have too large of a position in any one individual company. You want to be diversified at the end of the day. That way, during the times when the market is down, you're more eager to, oh, let me accumulate a little bit more. I've been buying VTI all this time, and Apple has had a nice pullback over the last month. Let me go ahead and add to my Apple position, or let me add to my Microsoft position. You think forward looking, like the market. The market is forward looking. That's how I do it. I'm thinking, I look back in time 5 years ago on the chart, and then I look at the future, look towards the future. Like, if Apple was $85, I'm just using this as an example. If Apple was $85 5 years ago, and you wish you would have bought more then, and it pulls back to $125 this year, you should be thinking the same thing. I should just buy more. I should just buy more. I'm properly allocated now. Let me buy more. Let me try to find some extra money to throw in here, because 10 years down the road, it may be $350, and they talking about doing another 10-for-1 stock split. You understand what I'm saying? But you already in position, and you have a nice position size to where, as though once the stock split, now it's moving up just as faster than it was when you had those 6 or 7 shares. Now you got 30, something like that. I'm just using it as an example, just throwing numbers out there. Don't be afraid. You have to be greedy when others are fearful, and fearful when others are greedy. Like, now the market has made new all-time highs time and time again over the last month or so. And I'm like, is a bear market about to start? I'm a little worried. Is it time to take some profit on some of these smaller positions that I have, as far as small cap companies, like your your Rivian, or your, not Rivian, your Palantir or SoFi or something like that? Is it time to start taking profit on some of these smaller cap companies? Because we're about to start a new bear market. That's where I'm at in my mental state. Like, the market making new all-time highs, and I'm getting nervous. Like, everything don't go up forever. It's time for a pullback, and then you have these geopolitical events and the inflation data coming in, and inflation is lower and slower than expected, and we're wondering if the Fed is going to cut rates this year or not, and he probably won't. So the market's going to react to it. So you just gotta just bite the bullet and just buy it. You believe in the company, and you know the company has a good, strong business model, a good balance sheet, and things of that nature. Yeah, it may be a little overvalued, but you want to
Mhm.
buy it when it goes to fair to undervalued state. That's when you want to be buying more.
Mhm. So before we
BTI.
answer, can I say something before we answer Gina's question? um, um, the person, I'm sorry, I forget if it was Shannon or the your comment about buying as it's coming down. Listen, you have to be mindful about what you are buying. You didn't share what the investment is, because there are some things that you can't just buy. I'm not saying you blanket buy the dip. You see something low, you buy it, it's going to come back up, because that doesn't always happen. But there are certain things in my portfolio that even as a stock, you have to be mindful of what you're investing into, and perhaps it needs to have a stop loss on it if you're not committed to it as a long-term hold. I don't have a stop loss. I'm not trying to accidentally. I'm willing to take the volatility. I'm willing to take the price movements on my Tesla, Even my Target and my Disney have, has had some significant dips, but I did not want to sell them. I'm going to hold them until they recover. I assume that they are going to recover. And when I invested into them, they were long-term holds for me. But you have to make that decision for yourself on, did I hold on too long? Can I, if something is down in your portfolio, or if you are buying the dip, are you buying the dip on a quality, good company? So I just want to share that. I agree with everything that Prez was saying, but I don't know what it is that you invested into. So I wanted to just make sure, because there are some things that I should have let go sooner. But I just kind of thought, oh, it'll come back, or I just wasn't as experienced about, I'm talking 4 years back. I was a little dabbling into the charge point and different things that I could have just focused on other things that were more of what I call my blue chip, long-term, sleep well at nights kind of investments. So, Gina, where is the comment? Oh, here it is. Okay. So any suggestions on ETFs to start with, Gina, if you are still here? Our answer is going to be the same. Go ahead, Press.
VTI, which is the Vanguard Total Stock Index. You have, I don't know if you see my YouTube short or not, but you have almost 4,000 companies in one basket. It's like you getting the most bang for your buck. It's a very low expense ratio at 0.03%. The expense ratio is basically deducted out of the share appreciation, the dividend, what have you. Automatically, you don't even notice that it's gone. Compared to a lot of these other ETFs where you may have a lower share price, but you're only getting 10 or 15 companies included in this ETF, or you're only getting one particular sector. Me personally, I would rather be exposed to the entire stock market versus just the S&P. Now, if you look at QQQ, which is a NASDAQ ETF, yeah, it has all of the tech companies inside of it. Yeah, you have your VOO, and why I don't choose VOO or QQQ is because, one, the expense ratio on QQQ, along with the high share price, and I'm not getting as many companies in this particular ETF as I would if I would just buy VTI. Whereas though I have the entire stock market, I have the Nasdaq, I have the Dow, I have the Russell, I have the S&P 500 all in one basket. That way I can limit my volatility on one particular sector. You don't want to be too tech heavy or too consumer product heavy. You don't want to be too heavily allocated into one sector. I know a lot of people see my YouTube portfolio like he got a lot of tech companies in here. Yeah, but I also have my healthcare. I also have my consumer discretionaries. I also have my retail companies in there, but I just have a smaller allocation of those particular companies because at the end of the day, one of the best performing sectors is the technology sector. Now, right now, the energy sector is superseding it as far as gains on the year. The energy sector is starting to catch up and even past the tech sector as far as year-to-date gains. So you want to be diversified. You have 11 sectors in the entire stock market. I don't have them all written down right here, but you can easily hit Google and say, what are the 11 sectors of the stock market? And then you can look for the best company that are in those 11 sectors, and you'll be able to make a good, sound decision if you want to have direct exposure into these particular companies or not. But you can't go wrong investing into BTI. You really can't. If you look at the performance over the last 5-10 years, it's done nothing but gone up. Let me pull it up real quick on my phone. The performance of BTI over the last 5 years. Hold on.
No, I got you, Press. Here you go. I have
Over
it
the
up
past
here.
5 years, BTI has a gain of 85.12% over the past 5 years.
Mm-hmm.
So you can just buy BTI, dollar cost averaging the BTI on a daily, weekly, monthly basis in regular amounts, and you can't go wrong. You don't even have to worry about picking an individual company unless you so choose to. Oh, I hear about Apple, I hear about Nvidia. I want a little more direct exposure to these individual companies. Though you're taking on greater risk, so you have to evaluate your own personal risk tolerance as to what age you are currently, what age you want to be when you retire, and things of that nature, because you're taking on greater risk when you invest into individual companies. But these fund managers, they're basically paid to actively manage these ETFs. So as though if as a particular company that's not making the cut, then they'll properly allocate it and change the allocation in this basket of stocks you just purchased. So as though you really have nothing to worry about. You can't go wrong investing into the S&P 500 or the entire stock market as a whole. So not a suggestion for you to buy, hold, or sell. I would consider looking into VTI. If not VTI, then VOO. VOO is basically the S&P 500.
Some other S&P 500. If you use Fidelity, another option would be FXAIX, and another option is SPLG. It has an expense ratio of 0.02, and it has a lower share price, but obviously the dividends, I think it's 20 cents per share or something, but it's pretty much the same, very similar other options of ETFs for S&P 500 exposure. So let's see. All right, Prez, anything else on your mind before we start to wrap up this episode?
No, that's about it. Any comments that stuck out that stood out to me? I apologize if I don't normally read the comments like I do on my live streams. I'll be trying to get the stay on topic and get what I wrote down on my notes out to you guys, because I a lot of time writing these notes down. Like, they look like chicken scratch on my paper. I don't know if y'all can see that, but yeah, I got very sloppy handwriting. It hurts my hands when I write, and so I just try to stay on topic. But if I missed not speaking to anybody in this particular chat, hello. I'd like to thank y'all for tuning in. Make sure y'all hit that like button. I hope y'all hit that like button, because we ain't say that none of this whole live stream. Make sure to subscribe to both of our channels. Miss Lisa J just got monetized. Congratulations for that. And I'm on the road to 300 subscribers. The last time I looked, I'm about 4 away. So if you guys can help me get to 300 so I can hit my next milestone, I would greatly appreciate it. Me personally, I go live every Monday, Wednesday, and Friday at 9:15 a.m. I do a portfolio update, a portfolio where I have been investing $5 a day, and I share the results every Saturday at 2 p.m. with my YouTube audience. Not to brag, but to simply encourage you and inspire you that you don't need a lot of money to get started. I see a lot of people say, well, I'm gonna wait till I get my income tax, or I'm gonna wait till I hit the lottery, or I'm gonna wait till I get my bonus from my job. I'm gonna wait till I pay down some of this debt. Yeah, paying down the debt is good. I'm an advocate for paying down the debt, but don't let the market pass you by at the same time while you're paying down that debt. There's a feasible way for you to be able to do both.
Yes, definitely. All right. Thank you for being an awesome co-host and being here with me every week, Prez. So Prez and I, we did our first live together. It was a long time ago. It's probably about 10 months ago now. So I had signed up for an hour slot in a hypathon, which was like a 24-hour YouTube marathon that they used to have going on. They haven't been doing it lately. So I signed up for an hour slot, had never gone live, had never been up here by myself. And I reached out to Prez and I said, Prez, I signed up for this. Would you mind coming? Even if it's not for the entire hour, would you come and do this show with me? And Prez is like messaging me back, like, Lisa, I don't know what you're talking about. What is that? What is it that you're asking me? And I was explaining it, and he showed up and he stayed with me for that entire hour, even though I was the busybody that went and signed up for this. And months later, this year, I think around February, we decided to start this again, and we've been keeping it consistent in this time slot. So be on the lookout for us Sundays, 3 p.m. Eastern Standard Time, to be here coming to you with a live discussion. Thank you to a brother of a certain age for sending me my first ever super chat. And I want to say thank you to Trudy, who sent me a very nice Cash App a few days ago, and all of you guys that have congratulated me. I was sharing more over on Instagram, but I appreciate everybody who has sent me a message over there also. So that's it. I am ready to wrap up this episode. I did put in the chat. Where is it? Okay. I did put in the chat Investing with Rod's link. He has a live. He'll be live at in 15 minutes. If you want to have some more investing chat for the day, go check him out or check out the replay if you guys have things to do. But thanks for tuning in, and we will be back on Sunday, 3 p.m. Eastern Time. You will find us here. All right, Prez, you want to close us out for today?
Sure. Thank you guys for coming out. If you don't find a way to make money while you sleep, you will work until you die.